Hello guys, welcome back. Today we're putting it all together into the cash budget. So yesterday we did the cash collection schedule and the cash payment schedule, and we're going to now put those in their respective sections and finish off a complete cash budget. So in the first financial budgets video, I gave you the overview of the main parts of the cash budget, right? But in reality, we know it's going to be much bigger, as you saw in the book. So let's go ahead and complete it using Outdoorsies data, so we have some real numbers to fill in. So if you don't already have it, go ahead and find it or print it from Canvas. It is the Outdoorsies packet. We have all the information we need now to pull it all together. Items 1 and 2 we did in the cash receipts and the cash receipts is another name for cash collection schedule. And we did this in the cash payments or cash disbursements schedule, the first two. All right, and then there's some additional information so we can complete the cash budget. So let's go ahead and use this as our format, but make it a little bit nicer and tailor it for the company that we're working on. So we're doing Outdoorsies. Name of the company. Outdoorsies. This is the cash budget, and you do say for the period ended, and then we show the individual time periods within it. So we'll have the month columns in it. For the quarter ended March 31st, 2020. We're going to show January, February, and March. So let's go ahead and put those. Jan, Feb, and March. We said the starting point for the cash budget is the beginning cash balance. So here, beginning cash balance. That should be either provided to you, or you would go ahead and grab that from the prior year's balance sheet. Whatever they ended the cash with is what they'd start this period with. We're told in item E, the company has a $15,000 in cash on hand. Okay, so that is our beginning. 15,000. All right. Now, we said that our next section, if you remember, is to add all your cash receipts. So we'll go ahead and say add cash receipts. Add cash receipts. And then we list all of the cash receipts. And they can be numerous, as you saw in the book. The main cash receipts item, the majority of your total cash receipts will come from your cash collections schedule right here. And it requires quite a lot of computation, as you saw, which is why it's a separate work paper. And we already did the cash receipts schedule for Outdoorsies a few videos ago. So that's our cash receipts or cash collections schedule. Alrighty, so let's go ahead and put it in. And we call it collections from customers. Make sure you can see it. I like to indent it so I know I'm still in the cash receipts section. Collections from customers. This comes from your cash collection schedule, because again, it's so much work. It would be too much here. We already know the cash budget is big enough on its own. So you're just going to take your total. So total collections for January, 616,800 will move here. 616,800. Now sometimes this is the only item that you have in cash receipts, just your collections from your customers. It's definitely the largest, and it might be the only one you have, but we should double check the information that was given and see if there are any other cash receipts for this company for the month of January. So go ahead and scan through. Okay. Here is a potential cash receipt. The company plans to sell equipment in March. That means we're going to sell it and get something of value in exchange, and we're going to assume that that is cash because we're not told otherwise. So that is another example of a cash receipt. However, it happens in March, so we don't need to put it in the January column. And if you scan the rest of the data, you'll see there's nothing else. I'm going to leave a spot for it for when we do get there in March. I want to make sure that I have a row to record that sale of equipment. sale of equipment. Okay, so that's all the cash receipts that we have for January. Remember we said when we add our cash receipts to our beginning cash balance, we call that total cash available. So let's go ahead and indicate that on the row. Total cash available. Round it up, and you should get $631,800. All right, moving on to our cash disbursements. Plus cash disbursements. Now likewise, the largest cash disbursements you're normally going to have is going to come from your cash payments schedule. We already did a cash payments schedule for this company, for Outdoorsies. Here it is. So you can see for January our total payments are $414,620. And if we looked back, those payments for purchases were for direct materials. So we'll go ahead and identify it as direct material purchases, DM purchases. And we said it was going to be $414,620. All right, scan the rest of your data. We probably have other disbursements besides just our purchases, though that's usually our largest one. You can see here in item 3 that we pay direct labor costs. The costs are paid as incurred. That means that we are paying it out in cash. So January direct labor costs are $90,000. But normally we'd get that from the direct labor budget, DL, direct labor costs. So our direct labor costs, $90,000. Moving on. Mo is $25,000 for January. These amounts include depreciation. All overhead costs are paid, except for depreciation, of course. We know that. So you're going to need to back out that depreciation from each one of those months. So that gives us Mo costs that are paid in cash of $19,000. Mo costs, $19,000. Keep looking to see what other cash disbursements you might have on there. The next one, all selling and administrative expenses are paid in cash as incurred, except for depreciation, of course. But they don't give you an amount there. Darn them. But that's because we did the selling and administrative expense budget previously. So January, I know it's a little tough to see. Hopefully your copy's a little nicer. It's $98,000, but you need to back out depreciation, because depreciation is never a cash expenditure. If you think back to the cash statement of cash flows that we did in 1A, remember our first adjustment was to add back depreciation because it's not a cash expenditure. So 98,000 minus the 4 gives us 94. So S&A costs. Good. Scan again, see if there's any other disbursements. There's a cash dividend. It's going to go out at the end of the first quarter, so I interpret that as March, but let's still create a row for it. So, cash disbursements, dividend, payment. So it's 0 for January, but I just want to leave the space for March when we get there. Outdoorsy makes quarterly payments of income tax, so it will be paid in March. Let's leave a spot for it. For January, it's 0, but we'll have something in there for March. And that is all the disbursements that we have. So we said we're going to subtract our disbursements from our cash available. If we have a positive number, we label that row excess of cash. If it's negative, we'll say deficiency of cash. So if you subtract all that up, let me see if your book does a subtotal for disbursements. Let me double check. Yep, they do. So let's go ahead and do total disbursements, because we have so darn many of them. And if we'd wanted to, we could have done a subtotal up here for total receipts. We just had one for this month. I didn't, but perhaps I should have left that to complement the next few months. That's right. All right, total disbursements, $617,620. So now we'll go on to our excess or deficiency of cash. Subtract that from your cash available. We get an excess of cash of $14,180. We're not quite done, because you remember that we have a third section called the financing section, which if we need any borrowings to maintain a certain level of cash, we take it out there or show any repayments in that section. So let's read a little bit more on our handout. It says the company tries to maintain a $15,000 cash balance. Therefore, in any month where the cash falls below that amount, which we did, the company will use its line of credit to make up the difference. Loans will be repaid in the earliest period in which there is a sufficient cash balance. That is, when the cash on hand exceeds the $15,000. The interest rate that we're going to have to pay is 24% annually. So we did fall below our $15,000, so let's go ahead and add in our financing section. Add borrowings. How much do we need to borrow to get us to $15,000? $820. Let's leave room for our repayments for when we finally have enough cash to repay, and that gives us ending cash balance. Will give us an even $15,000. Now go ahead and try February on your own. We'll get you started. So this is what you end January with, therefore that's what you start February with. Okay, go ahead and try February and March, and I'll post the solutions.